Imagine this: a young boy in Omaha, Nebraska, delivering newspapers in the early morning hours. His name is Warren Edward Buffett. Long before the world knew him as the Oracle of Omaha, he was just a kid with an entrepreneurial spirit and an insatiable curiosity about money. Born on August 30th, 1930, during the Great Depression, Warren grew up in a modest household. While his peers were playing games, he was making money, sometimes literally. At just 6 years old, he bought 6 packs of Coca-Cola from his grandfather's grocery store for 25 cents and sold each bottle for a nickel, making a 5-cent profit on every pack. It was a small venture, but it was the start of something remarkable. By the time Warren was 11, he made his first investment. He purchased 3 shares of City Service preferred stock at $38 per share. Soon after, the stock dropped to $27, but Warren held on. When it rebounded to $40, he sold, pocketing a small profit. However, not long after, the stock soared to over $200 a share. This experience left a lasting lesson. Patience is key. He often recalled this story, emphasizing the importance of long-term thinking and not acting on impulse principles that would become hallmarks of his investment philosophy. Young Warren didn't just learn from his experiences, he devoured books. At just 12 years old, he read 1,000 Ways to Make $1,000, a book that ignited his passion for building wealth. He became obsessed with financial data and investment strategies, even setting a goal to become a millionaire by the age of 30. His teenage years were filled with entrepreneurial experiments. Warren expanded his newspaper route, employing friends and maximizing his earnings. He bought pinball machines and placed them in local barber shops, sharing profits with the shop owners. This venture grew quickly, and before long, he sold the business for $1,200, a huge sum at the time. When it came time for college, Warren attended the University of Pennsylvania's Wharton School at just 16 years old. He later transferred to the University of Nebraska, where he graduated with a business degree. However, his academic journey didn't stop there. He applied to Harvard Business School, but was rejected, something he would later describe as one of the best things that ever happened to him. Instead, Buffett enrolled at Columbia Business School, where he met Benjamin Graham, the father of value investing. This encounter would change Warren's life forever. Under Graham's mentorship, Buffett learned the principles of value investing, buying stocks that are undervalued relative to their intrinsic worth. Graham's teachings laid the foundation for Buffett's entire investment strategy. After graduating, Buffett wanted to work for Graham's firm, but his initial job application was turned down. Unfazed, he returned to Omaha and started his own investment partnership. Eventually, Graham offered him a position at Graham Newman Corp., where Buffett honed his skills in analyzing stocks and identifying opportunities in the market. In 1956, at just 25 years old, Warren returned to Omaha and launched Buffett Partnership Limited with $100 of his own money and $105,000 from family and friends. He used Graham's value investing principles, focusing on undervalued companies and avoiding market speculation. His partnerships grew rapidly, and by 1962 he had become a millionaire. Around this time, Buffett began acquiring shares of a struggling textile manufacturing firm called Berkshire Hathaway. At first, this was just another value investment. Berkshire's assets were worth more than the price of its stock. However, a disagreement with the company's management led Buffett to buy more shares, eventually taking control of the company. What started as a textile play evolved into a holding company that would become a massive conglomerate. Buffett began redirecting Berkshire's capital from the struggling textile business into more profitable ventures. He acquired insurance companies which provided a steady stream of cash known as float that he could invest elsewhere. This strategy would become a critical component of Berkshire's success. Through the 1970s and 1980s, Buffett made a series of iconic investments in companies like the Washington Post, Geico, and Coca-Cola. His focus remained on businesses with strong fundamentals, competitive advantages, and capable management. Unlike many investors of his era, Buffett was not swayed by trends or market fads. He believed in buying great companies at fair prices and holding them indefinitely. Buffett's approach was simple yet revolutionary. Buy businesses, not stocks. He saw himself as a business owner, not a stock trader. This mentality helped him avoid the pitfalls of market speculation and allowed him to maintain a disciplined, long-term strategy. Even as his wealth grew, Buffett remained remarkably humble. He continued living in the same Omaha home he purchased in 1958 for $31,500. His lifestyle remained modest, and he shunned extravagance. This grounded nature only enhanced his reputation as a financial sage who genuinely practiced what he preached. By the 1990s, Warren Buffett was not just a successful investor, he was a cultural icon. His annual letters to Berkshire Hathaway shareholders became must-reads for investors worldwide. His partnership with Charlie Munger, a brilliant thinker in his own right, strengthened Berkshire's business model and investment philosophy. Buffett's philosophy of value investing extended beyond stocks. He looked for value in people, companies, and opportunities. He valued integrity and long-term thinking, both in business partners and in investments. His mantra of buying wonderful companies at fair prices continued to guide his strategy, leading to Berkshire's exponential growth. Imagine waking up every morning with a clear vision, not just of where you want to go, but of the steps you need to take to get there. That's the kind of clarity Warren Buffett has practiced his entire life. His mindset isn't just about making money, it's about making decisions that align with a larger vision of success, fulfillment, and impact. To think like Warren Buffett, you need to start by seeing the world differently. Where others see obstacles, Buffett sees opportunities. Where others see risk, he sees potential reward. This mindset shift is crucial for anyone aspiring to build wealth and achieve lasting success. Buffett often says the best investment you can make is in yourself, and he means it. He's not just talking about financial investments. He's talking about knowledge, skills, and habits. He spends 5 to 6 hours a day reading everything from newspapers to financial reports. He believes that the more you learn, the more you earn. So ask yourself, are you dedicating enough time to your personal growth? Are you feeding your mind with the right information? When Warren was young, he made a commitment to learning. He didn't waste time on things that didn't align with his goals. And he didn't just read. He absorbed, analyzed, and applied what he learned. If you want to think like a billionaire, start by building a daily habit of learning. Read books, study successful people, and immerse yourself in knowledge that moves you forward. Buffett also emphasizes the power of focus. He once said, "The difference between successful people and really successful people is that really successful people say no to almost everything. Think about that for a moment. How often do we spread ourselves thin, chasing every opportunity, saying yes to every request? Buffett's strategy is the opposite. He chooses his investments and his commitments carefully. He only goes all in on things that align with his vision. If you want to adopt Buffett's mindset, you need to master the art of saying no, not just to others but to your own distractions. Say no to habits that waste your time. Say no to doubts that hold you back. Say no to opportunities that lead you off course. The more focused you become, the clearer your path to success will be. One of Buffett's most powerful lessons is about patience. He's often quoted saying, "The stock market is a device for transferring money from the impatient to the patient." This philosophy extends beyond investing. It's a rule for life. In a world obsessed with quick wins and instant gratification, Buffett stands as a reminder that true wealth, whether financial, personal, or professional, takes time to build. Take a look at his investment strategy. Buffett doesn't trade stocks daily. He doesn't chase trends or jump on bandwagons. Instead, he invests in companies he truly believes in and then waits, sometimes for decades. His success isn't just because of what he buys, it's because of how long he holds on. This is a mindset we can all apply. When you make a decision, commit to it. When you set a goal, stick with it. When you start a journey, see it through. Another crucial aspect of Buffett's mindset is his ability to think independently. He has often said, "You need to divorce your mind from the crowd." He doesn't let market noise influence his decisions. He doesn't follow the masses, he follows the facts. This independent thinking has allowed him to make bold moves, like investing in companies others doubted and avoiding market bubbles others rushed into. If you want to think like a billionaire, learn to trust yourself. Develop your own criteria for success. Make decisions based on research and reasoning, not on what everyone else is doing. The crowd often panics, but billionaires remain calm. The crowd often sells, but billionaires hold. The crowd often hesitates, but billionaires take action. Buffett's journey also teaches us about integrity and reputation. He says it takes 20 years to build a reputation and 5 minutes to ruin it. Despite his wealth, he values his character over his cash. He believes that trust and integrity are assets that appreciate over time, while dishonesty is a liability that can bankrupt you regardless of your financial status. To think like Buffett, start valuing your reputation as much as your bank account. Keep your word. Treat people well. Do business with a long-term perspective. When people trust you, opportunities will naturally come your way. Lastly, one of Buffett's secrets to success is gratitude. Despite his enormous wealth, he remains humble. He often says he won the Avarian lottery by being born in America, where opportunities were abundant. This gratitude fuels his generosity, from his decision to donate the majority of his wealth to charity to his everyday interactions with people. When you adopt a grateful mindset, you open yourself up to more possibilities. You stop focusing on what you lack and start appreciating what you have. You begin to see every setback as a setup for a comeback, every challenge as a chance to grow, and every moment as an opportunity to move closer to your goals. So as you listen to this, ask yourself, are you thinking like a billionaire? Are you investing in yourself? Are you focused on your vision? Are you patient, disciplined, and independent in your decisions? Are you protecting your reputation and practicing gratitude every day? The truth is, you don't need millions in the bank to start thinking like Warren Buffett. You just need the mindset, the habits, the discipline, and the vision. And if you can master these, wealth will follow. Maybe not overnight, but certainly over time. Remember, success isn't just about achieving your goals. It's about becoming the kind of person who can achieve them consistently. And that's the true essence of Warren Buffett's $100 billion mindset. When we talk about Warren Buffett's investment strategy, we're talking about a philosophy that's as much about discipline and patience as it is about numbers and financial statements. Buffett is often called the Oracle of Omaha, not because he has some mystical foresight, but because of his extraordinary ability to see value where others do not. So, how does he do it? How does he consistently pick winners in the stock market while others struggle to keep up? The answer lies in his approach to value investing, an approach he learned from his mentor, Benjamin Graham. Value investing is about buying stocks that are undervalued by the market. Instead of getting swept up by market trends or hyped-up stocks, Buffett focuses on businesses that have strong fundamentals but are temporarily underpriced. He looks for companies with a solid business model, competent management, and a durable competitive advantage, what he calls an economic moat. For Buffett, an economic moat is like a castle's defense. It's what protects a company from its competition. This could be brand strength, customer loyalty, low production costs, or exclusive patents. Think about it, brands like Coca-Cola, Apple, and American Express. These are companies with moats, and they've all found a place in Buffett's portfolio. When Warren Buffett invested in Coca-Cola, it wasn't just about numbers on a spreadsheet. He understood the brand's global appeal, its distribution network, and its unmatched brand recognition. He believed that no matter where you went in the world, you could find a Coke, and that kind of market presence is invaluable. One of the secrets to Buffett's success is his legendary buy-and-hold strategy. He buys stocks with the intention of holding them forever. He's not interested in short-term gains or quick flips. Instead, he looks at stocks as pieces of a business he wants to own for the long haul. Buffett has often said, "Our favorite holding period is forever." This mindset is a stark contrast to the day traders and speculators who jump in and out of stocks at the slightest market movement. While they chase trends, Buffett builds wealth. Consider this. Buffett bought his first shares of Coca-Cola in 1988. Decades later, he still holds those shares. Over that time, he's earned billions in dividends and capital appreciation. This is the magic of compounding, earning returns on both your original investment and on the returns that investment generates over time. He likens investing to planting a tree. The sooner you plant it, the sooner it will grow. But if you keep digging it up to check the roots, or in investment terms, if you keep selling your stocks, you'll never reap the rewards. Warren Buffett has an uncanny ability to stay calm in the face of market chaos. When others panic, he remains composed. He understands that the stock market is often driven by emotions, fear, and greed, and he leverages this knowledge to his advantage. During the 2008 financial crisis, while most investors were selling in fear, Buffett was buying. He invested billions into companies like Goldman Sachs and Bank of America. His reasoning was simple. While the market was in turmoil, he saw the long-term value in strong businesses. Buffett's philosophy is clear. Be fearful when others are greedy, and greedy when others are fearful. This contrarian approach has allowed him to make some of his greatest deals when the market was at its lowest. One of Buffett's earliest and most successful investments was in Geico, the insurance company. Back in 1951, as a young student, Buffett visited Geico's headquarters and spent hours talking with its executives. He realized that Geico had a unique business model with direct-to-consumer sales that cut out the middleman and reduced costs. He invested heavily, and decades later, Geico became a cornerstone of Berkshire Hathaway's portfolio. Another monumental investment was Apple. Despite being known for avoiding technology stocks for years, Buffett made a massive bet on Apple in 2016. He recognized Apple's strong brand, loyal customer base, and its potential to generate substantial cash flow. Today, Apple is one of Berkshire Hathaway's largest holdings, generating billions in returns. But not every decision has been perfect. Buffett himself admits to mistakes. One of his biggest regrets was not investing in companies like Google and Amazon early on. Despite recognizing their potential, he hesitated because they didn't fit neatly into his traditional value investing criteria. He has also had a few investments that didn't work out, like Dexter Shoe Company, which resulted in a nearly $3.5 billion loss for Berkshire Hathaway. However, Buffett doesn't shy away from these failures. Instead, he uses them as lessons. His transparency about his mistakes has earned him immense respect in the business world. Despite his wealth, Buffett leads a remarkably simple life. He still lives in the modest home he bought in 1958 for $31,500. He often drives himself to work and eats breakfast at McDonald's. This simplicity isn't about being frugal. It's about focusing on what truly matters. Buffett doesn't believe in wasting money on material excess. Instead, he channels his wealth into investments, philanthropy, and building Berkshire Hathaway. His lifestyle is a reminder that wealth is not about what you spend, but what you keep and how you use it to create more value. For those looking to adopt a billionaire mindset, this simplicity is a powerful lesson. It's not about living a flashy lifestyle. It's about building sustainable wealth that can support you, your family, and your future goals. A cornerstone of Buffett's legacy is his philanthropy. He has pledged to give away 99% of his wealth to charitable causes, primarily through the Bill and Melinda Gates Foundation. This generosity is a reminder that true wealth isn't just about accumulation. It's about impact. He encouraged others to do the same. Through the Giving Pledge, Buffett and Bill Gates have inspired hundreds of billionaires to commit to giving away the majority of their wealth. His philosophy is clear. If you're fortunate enough to build massive wealth, you have a responsibility to use it to make the world a better place. Now, imagine this. It's the late 1960s. A young Warren Buffett walks into a room filled with Wall Street's brightest minds. The air is thick with the scent of cigar smoke, and the hum of conversation is all about the latest hot stocks and quick profits. But Buffett, clad in his unassuming suit and thick glasses, isn't there to gamble. He's there to hunt. You see, while others were chasing the noise of the market, Buffett had his eyes on the signal. He was like a predator, patient, strategic, and ready to strike only when the time was right. This is the mindset of a billionaire. Buffett's secret weapon is his ability to think long term. While most people can barely see past their next paycheck, Buffett sees decades into the future. He doesn't just buy stocks, he buys businesses. He isn't interested in what a company's stock price will be next week. He wants to know where the business will be in 10, 20, even 50 years. And this is where most people get it wrong. They think wealth is built on quick wins, on sudden windfalls. But in reality, real wealth is a slow, deliberate process. It's about making smart decisions consistently over a long period. Buffett often compares investing to planting a tree. He says, "Someone's sitting in the shade today because someone planted a tree a long time ago." Think about that. Every investment he makes is like planting a seed. He nurtures it, gives it time, and eventually it bears fruit, massive, life-changing fruit. So how do you adopt this billionaire mindset? How do you start thinking like Warren Buffett? First, you need to shift your perspective from instant gratification to delayed rewards. Billionaires play the long game. While others are chasing trends, they are building empires brick by brick. For Buffett, this meant avoiding the temptation to invest in things he didn't understand. During the dot-com bubble, when everyone was pouring money into tech stocks, Buffett held back. He didn't understand the technology, and he refused to invest in anything outside his circle of competence. While many investors lost fortunes when the bubble burst, Buffett remained unscathed. The lesson here is powerful. Stick to what you know. You don't have to chase every opportunity. Instead, focus on mastering a few areas and capitalize on them with conviction. To truly understand Buffett's mindset, let's rewind to his earliest investments. As a teenager, Buffett was already thinking like a businessman. He bought a pinball machine with a friend and placed it in a local barber shop. The machine made money while he slept. When he earned enough, he bought more machines and placed them in more shops. This wasn't just about making a few bucks, it was about learning the power of passive income. Buffett realized early on that the key to wealth wasn't just working harder, it was making money work for him. This is why, even today, he focuses on businesses that generate consistent cash flow. He's not just looking at profits, he's looking at how much money a company can return to him, year after year, with minimal effort. One of Buffett's most famous investments was in American Express. In the 1960s, American Express was hit by a scandal, the Salad Oil scandal. The company's stock plummeted as investors fled in panic, but not Buffett. While the market was gripped by fear, Buffett saw an opportunity. He realized that the scandal didn't change the fact that American Express was a powerful brand with a strong business model. So he went all in, investing 40% of his partnership's funds into American Express. The result? When the panic subsided and the company recovered, Buffett made a fortune. This wasn't just a smart financial move, it was a masterclass in the power of patience. Buffett's success wasn't just about picking the right stock, it was about waiting. While others sold in fear, he held on, confident in his analysis and his long-term vision. One of the most powerful concepts that Buffett embodies is compounding. He describes his wealth-building journey as a snowball rolling down a hill. At first, the snowball is small, but as it keeps rolling, it gathers more snow and grows exponentially. When Buffett talks about compounding, he isn't just referring to money. He's talking about knowledge and habits too. He believes that if you make small, smart choices every day, over time, they lead to massive results. For investors, This means reinvesting dividends, staying consistent with your strategy, and letting time do the heavy lifting. For life, it means building good habits, learning continuously, and staying disciplined. If you had the chance to ask Warren Buffett for his rules of success, here's what he might tell you. 1. Invest in yourself. The best investment you can make isn't in the stock market, it's in your own skills and knowledge. Buffett himself invested in a public speaking course early in his career because he knew that communicating well would amplify his success. 2. Avoid debt. Buffett has often warned against borrowing money to invest. He believes debt is a dangerous tool that can amplify losses. Instead, he advocates living within your means and using only the money you can afford to lose. 3. Stay rational. The stock market is a roller coaster. While others react emotionally, Buffett stays calm. He makes decisions based on data and analysis, not on gut feelings. 4. Surround yourself with good people. Buffett is known for his partnership with Charlie Munger. He believes that who you associate with has a significant impact on your success. 5. Be generous. Despite his wealth, Buffett plans to give away 99% of his fortune. He understands that true success isn't just about accumulating money, it's about making a difference. Warren Buffett is known for his remarkable focus. While many successful individuals try to diversify their investments, Buffett takes a different approach. He believes that in order to truly excel, you need to focus on what you do best. He often talks about his circle of competence, the idea that you should only invest in things you understand deeply. Buffett's investments don't span across every sector. Instead, he concentrates his wealth in industries and companies where he has the greatest knowledge. His portfolio is a reflection of his own expertise and values. This level of focus is crucial because without it you're spread too thin, and that's when mistakes happen. One of the most iconic examples of this strategy is his investment in Coca-Cola. When Buffett first invested in the company in the late 1980s, he had already spent years observing its brand power, its global reach, and its simple yet compelling business model. Rather than following market trends, Buffett trusted his deep understanding of the company, and that decision paid off handsomely. Buffett has said that he doesn't need to understand the intricacies of every business. He doesn't need to understand the ins and outs of every industry. What he cares about is simplicity and clarity. Coca-Cola is an example of this. The company has a simple product with universal demand, a product that anyone can understand. Back in 1988, Coca-Cola was going through its own set of challenges, but Buffett saw an opportunity. He understood the power of branding and customer loyalty that Coca-Cola possessed. He saw it as a timeless investment. He wasn't trying to predict short-term market fluctuations. Instead, he made a long-term bet on the consistency and durability of the brand. That's the kind of clarity Buffett relies on. He only invests in businesses that make sense to him, businesses he can easily understand, ones with strong brand recognition, recurring revenue, and a competitive edge. Buffett's success isn't just about picking the right companies. It's also about knowing how to allocate capital effectively. When you have a large sum of money like Warren Buffett, you must decide where to deploy it in a way that maximizes returns. Buffett is extremely strategic when it comes to capital allocation. Rather than placing his money in risky ventures, he puts it into businesses that align with his investment philosophy, and have predictable, long-term cash flows. This strategy has allowed him to compound wealth at a higher rate than most investors. Buffett uses his business, Berkshire Hathaway, as a vehicle for growing wealth, and he places a heavy emphasis on how that capital is deployed. He's known for making investments that will generate consistent returns for years, whether that's by acquiring entire companies like See's Candies or investing in stocks like Wells Fargo. This is how he's been able to amass such wealth over time. A cornerstone of Buffett's approach to building wealth is patience. He doesn't get distracted by short-term market movements or get swept up in the emotions of others. When the market is in turmoil, Buffett is calm. He waits for the right opportunities to come along, and when they do, he acts decisively. Buffett's patience is rooted in his deep understanding of business cycles. He knows that markets have ups and downs, but over time, quality businesses always tend to rise to the top. He often advises investors to think long-term, saying, "The stock market is a device for transferring money from the impatient to the patient." This strategy is especially valuable in a world where many people are looking for quick gains. Buffett's ability to delay gratification and wait for the right moment to strike has allowed him to build his empire. And this is a lesson for anyone looking to build lasting wealth. Success takes time, and the ability to wait for the right moment is priceless. Buffett isn't just a stock investor, he's a master at creating multiple income streams. One of the key factors that sets him apart from others is his ability to find new ways to generate revenue. While most people rely on a single source of income, Buffett has built a vast network of profitable businesses under Berkshire Hathaway. For example, Berkshire Hathaway owns more than just stocks. It also owns a wide range of businesses across industries. This includes everything from insurance to consumer goods and even real estate. Each of these businesses generates steady cash flow, providing Buffett with an ever-expanding empire. By diversifying his business interests while maintaining his focus on high-quality, long-term investments, Buffett has been able to create a system that generates income no matter the economic climate. For anyone looking to emulate Buffett's wealth-building strategy, this is a key lesson. Don't rely on just one source of income. Build multiple streams that can weather any storm. At the heart of Warren Buffett's wealth lies one simple principle: consistency. Buffett doesn't chase after the next hot investment trend, and he's not interested in making a quick buck. He's in it for the long haul, and that's why he's been able to grow his fortune into the hundreds of billions. The secret to Buffett's success is his unwavering consistency. He's followed the same core principles for decades, investing in businesses with strong fundamentals, focusing on long-term growth and always keeping a level head in times of uncertainty. If you want to think like a billionaire, you need to adopt this mindset. It's not about timing the market, it's about making smart decisions consistently, year after year, and trusting that your strategy will pay off in the end. Finally, one of the most inspiring aspects of Warren Buffett's journey is his commitment to giving back. Buffett has pledged to give away 99% of his wealth to charity, and he has already donated billions to causes like healthcare, education, and poverty alleviation. For Buffett, wealth is not just about accumulating money. It's about using that money to make a difference in the world. He encouraged other billionaires to do the same through the Giving Pledge, an initiative he co-founded with Bill Gates that asks the wealthiest people in the world to pledge at least half of their wealth to charitable causes. Buffett's legacy will not just be about the wealth he amassed, but the positive impact he had on the world. And for anyone looking to build their own legacy, this is an important lesson. True wealth is about more than just what you accumulate. It's about the difference you make. As we near the end of this exploration into Warren Buffett's $100 billion mindset, remember his success isn't just about numbers. It's about mastering patience, staying disciplined, thinking long-term, and using your wealth to make a difference. These principles can apply to anyone, no matter where you are in your journey. The journey to becoming a billionaire isn't about getting lucky. It's about thinking like a billionaire and following the timeless wisdom that's been proven to work again and again. Stay focused, stay patient, build, and when the time is right, strike. And above all, never forget the power of giving back. This is Warren Buffett's way, and now it's yours too. If you want to think like a billionaire and transform your life, hit that subscribe button and join us on this journey to success.